What's up, traders? Cam Hawkins here from Trading Up. We've got Paul Bratby in the house. We've just done an amazing podcast. Go and check it out. Link under the video. You're going to get to find out how Paul got into trading and how he trades today. But now you're going to see, how he trades on the charts today in a second anyway. So he's going to talk you through the perfect Elliott wave example. What else are you going to talk us through? You tell us, Paul.
So we're going to go through swing trade with Elliott Wave, just to show you how easy it is. Then we're going to look at a gold trade that I did this morning, and basically when we talked in the podcast about managing the trade and using that manager, I'm going to talk about that now and that behavior. And then we're going to look at a crypto chart.
Awesome, brilliant. Well, let's share your screen and have a look. Hey folks, my sponsors City Traders Imperium have just launched some amazing changes to their funded trader program you got to check out. You can now skip the whole evaluation, trade gold as well as Forex, plus they've increased the drawdown you're allowed in both the evaluation and when funded. With C2A, it's even faster and easier to reach up to $4 million in funding with a 50 to 70% profit share. Click the link in the description to find out what else has changed.
Okay, so this is NVEE. It's on the weekly time frame. Weeklies and daily time frames is the one I look for stocks. We talked about in the podcast just the behavior. So one of the things that I said right at the end of the podcast is understanding the trend and being able to identify those channels. So it doesn't take the brains of a rocket scientist to understand that this stock, since March 2020, after the pandemic pullback, is in a trend. Yeah, you can identify that trend with a trend channel. One of the things when I talk about framing the chart is understanding the channel, but more importantly, that center line of the channel is so important. So yes, we've only got 1-2 touches on the bottom of the channel. We've got 1, 2, 3, 4 at the top. The wave 3 didn't. Okay, that's fine. Okay, the wave 5. But along this channel, along this center line, look at all these attempts from below here, support here, resistance here. This has so many touches. That is the trend. And what you've done is framed that trend with a channel. Very, very important. One of those things that you must be able to do. So now, remember I talked about the Elliott wave and not being stuck up on all the rules. Okay, what we do with the software is very, very simple. We have to understand this wave 4 pullback. So the main thing is when it pulls back into one of our probability pullback zones. So, I can mention fibs and all that sort of stuff. It doesn't matter. It's printed there. So there it comes. It found support, but look at the behavior of that weekly candle. Let's go and have a look. That candle rejects the lows there and forms a hammer at that wave 4. That is that behavior after that profit taking over 10 weeks, which is normal, is very prevalent. We look at the stochastic. It's crossed over in the oversold zone on the wave at the wave 4. These little dots at the top mean that previous impulse move, that wave 3, was very strong bullish, because what happened is in the overbought zone, it kept trying to break out, false breakout, kept going up. But then when we pull back against that wave 3, that main trend on that wave 4, and we pull back into the oversold zone, imagine the stochastics like an elastic band. It wants to return to those false breakouts at the top, okay? Not only that, we have an Elliott wave oscillator. So you can see on the oscillator, if I go big here, during the wave 3, it comes back down, it crowns between 90 and 140. So that's all we need to say that behavior is pretty good, okay? All we need now is an entry strategy. We do that conservatively with this little blue, it's called a 6-4 moving average high. So what that does is takes the average of the last 6 weeks of the highs and it just skews it over by 4. So it gives you that conservative entry. So the entry was here at 93.82 because we were outside of that 6-4 moving average high, okay? We then had a nice move up. I've identified that previous wave 3 because what happens in this 5th wave move, the general behavior 90% of the time is we go up to test that previous high. we have a slight pullback. And this is when we talked about multiple time frame strategies. This is a weekly time frame. So you'd look on smaller time frames for that short. We find higher support and it has another crack at it. It pushes through, and that's, again, it's the highest probability move, this fifth wave. But not only that, look at that candle that pushes through that target zone there. Huge. Now we can start to manage that trade above our original target. And this is where we are right now. Again, I'm using the daily time frame to actually look at that, because when you look on the daily time frame, it tells you a different picture. Actually, that was a gap up. Okay. So on a weekly time frame, you just see a massive candle. So what's happening on the lower time frame is we've actually gapped up above that fifth wave target zone. So what I've done is put my trading stop a little bit below there. I'm locking in 200% profit times risk. So if I've risked $10,000 on that trade, I'm now at $20,000 locked in. Yeah. And what we're doing now is we're forming that cluster. It could break up or down. And it's very difficult at this time to understand what it's going to do. But what we've done is we've locked in profits with that trailing stop. You can look at stocks pre-market to see what's happening. You can see the pre-market here on TradingView. It's down slightly, but not a lot, okay? And that's, this is this trade that we've got in so far. You can see at the moment, you see these little dots here on the daily, and I'm going to go into the manager a little bit on the next chart. But this is telling me that that's higher than average volume. The dots below are lower than average volume. The green candle is what we call an accumulation candle. So that has more volume than the previous week's candle, or previous day's candle in this case. So it's what's called accumulation. The next candle has higher than average volume. It's a down candle, but it has less volume than that green one. Okay, it's quite complicated. The next candle is a gray candle, is an up candle. So you can see we're going down and up each day. No one wants to make a decision to either sell off or see value and buy. Yesterday, we had a red candle. That's what's called a distribution candle. So there was more sellers in the market than buyers. It was higher than average volume, and it had more volume than the previous day's candle. So that's a warning sign. If we get a continuation candle today with a lower high, lower low, that, and with higher than average volume, we might want to just get out and take that little bit of extra profit there. So that's just telling us what's happening. So if I now go to the gold trade from today, this is what we call a range breakout. So there's no physical gold pit for Europe or the US anymore. It's just when the gold traders, the institutional traders, start work. Okay, that's when you start to see more volume. And the idea with these pit opens is that you get a range. So on the gold or any metals or energies, we're looking on the 5-minute time frame. So we can see this defined here by our software. It's actually printed in yellow, and the range is printed in yellow. So at that point, there's no bias. You can go long or short out of that range, okay? There's indecision. Whereas then, so you could put a long order on, you could put a short order on at the same time, like straddle it. It breaks out to the downside as the range turns red, and we are going. But one of the things I wanted to really talk about here was the manager. So a lot of traders, retail traders, the problem with retail traders is they'll get this short move, and that short move was worth, down to these lows here, around $260 per one contract, okay? Not a bad trade, but all of a sudden it starts to pull back up. They panic, they close the position out. I don't do that personally, because I look at the average volume and I look at the behavior of each candle. So we're going sideways with lower than average volume. We get a higher than average volume here, but it's a red candle. There's more sellers, okay? Then we get a higher than average volume move up, the dots up above, but it rejects those highs, okay? So as soon as the price went up, a lot of sellers came in and pushed it back down again. not only did it happen once, but again for a second time. It went to go up. We got higher than average volume, but it was a rejection. Okay. Then look at that move then. Okay. All the way down to that support and resistance zone. That's when you would take your profit, support and resistance. Now we're on the 5 minute, but what I do is I look on the 15 minute to actually identify those support and resistance zones. And when I talked about those framing your chart, understanding what happened yesterday, that was yesterday's low here, okay? We had a rejection here. That identifies a range of price, okay? And this is where we took our profit. There is one lower. If you go a long way back on the hourly, you've got to go a long way back to here, to these pivots. That pivot there defines the high of the zone. That pivot there defines the low of the zone. So again, that could be trouble ahead in the near future. But if I go back to this chart here, you can see what happened at that support zone. We were going sideways on lower than average volume for an hour, okay? It wasn't really pushing down. Now look at these candles coming up. Higher than average volume, accumulation. It's probably going to come back up and test this opening range. So the manager helps you understand that behavior, but you still need those basics, that basic training in understanding where those support and resistance zones are. Those support and resistance zones are not dictated to by retail traders because you haven't got the buying power. It's dictated to by those institutional traders. So in the recent past, it's hit that price and institutional traders say, I'm buying gold. And they buy gold on volume and they go, okay? So that behavior you can put on a chart. So when you actually get that move through and you reject, and that's probably a 382 fib retracement on this one candle, okay? It's higher than average volume, not 50% retracement, but it rejects and it never goes back down. That's the time to take the profit. And that's what we did. I mean, this was $1,000 trade. There's your, take profit at 100 pips, 100 ticks, I should say. And into that zone, your 600, I think most of the guys in the Discord group made about $700. They waited and it wasn't pushing down. It was lower than average volume, going sideways. So they just decided to get out. I think 730 seemed to be around the average looking at the Discord group there. So, this is the time to say, get out. So the last chart is crypto. And we talked about in the podcast interview, crypto has pure behavior. There is, unless you have an Elon Musk tweet saying you can buy Tesla with Shibu or something like that, nothing really moves this except for the traders. Okay.
Hey guys, ever wonder what broker I use? Well, I use these guys, Hanko Trade. Look, it was a no-brainer for me because I was looking for a broker with really good trading conditions and one without any leverage restrictions. Look, also, by joining Hanko Trade, I was able to cut my cost of trading significantly with their super low commission of $1 per 100K. Look, if you want to find out more, check out hankotrade.com or there is a link in the description. That's some amazing stuff there. I love that. 3 different kinds of approaches, guys. Probably worthwhile going back and having a look at this video again and replaying a few things in there because I know there's a lot of value in this. Paul, thank you very much for coming on the show. What's the best way for the guys to get hold of you?
Go to globaltradingsoftware.com, fill in the contact form or the link below the video into the Discord group. To be honest, I'm active in there. In the Discord group, sometimes emails get missed. If that Discord group is open on my top screen all the time. If people have got a question and I'm about, I'll answer it.
Cool. Well, look, guys, we did actually do an amazing podcast as well before this. If you do want to put some context around what Paul's just showed you, go and check it out. Links under the video and links to all the things he just mentioned as well. Guys, hit subscribe, hit like, click on the notifications bell, click all, and we'll see you in the next video.